Hello everyone. 3rd of January. So happy New Year to everyone. It's my first webinar of the new year. So happy New Year to everyone. So we started the week a bit with a combination of two indicators for our very first technical technical analysis webinar. So is Ichimoku and Renko. So a strategy combining those two. Actually, it's not exactly strategy is how you can use both of them for in your analysis, in your technical analysis. Use their whatever you derive from them, how you can use them, identifying some support and resistance levels, trigger points, entry points, stop losses, etc. So before we officially start and go through what is Ichimoku, what is Renko, advantages, disadvantages, how they look like, and etc., let me go through the disclaimer warning as usual. For anything, also before the disclaimer, let me know as usual whether you can hear me loud and clear and see my screen as well. Just where is the question box? Okay, question box is on. So yeah, just a quick yes. Just a quick yes or a no. Just confirming whether you can hear me and see my screen as well. So, disclaimer. This material provides a general marketing communication for informational purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that an investment leverage product is characterized by a certain degree of uncertainty, and that an investment leverage product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure. So admin is out of the way, so we are ready to go. Handout is on the handout section, so you feel free to download it. Guys, I would really appreciate a yes and a no in regards to the sound. Okay. Email as usual. Our email is at webinars@hotforex.com. Feel free to contact me anytime. Okay. How to apply Ichimoku Renko and trading strategy. So we're gonna see what is Ichimoku, what is Renko, how they work, how they could be used together, and managing risk when using these two indicators, but managing risk in general. The points that I put on is things that you should already have in your minds and already apply them before taking an entry into the market. Okay. So guys, let's start. Let's start with what is Ichimoku. So I have a single, definitely I have one, and Stuart has one. We already have in a separate webinar, the Ichimoku indicator, but today we're gonna see it once again. I don't see your screen clearly. The words are very thin. That's a bit bizarre. What about now, dear, that we move on to the next slide and actually now should be okay. I think let me know if it's still the case, okay? Anyway, I have uploaded also a handout, so everything that we're gonna cover today, all the slides that we're gonna see today, it's on the handout as well. So feel free to download it. So Ichimoku, what is Ichimoku? So Ichimoku Cloud, actually, this is how the name, the official name of it. So it's another technical indicator, okay? So Ichimoku indicator is actually an indicator and technical indicator that defines support and resistance levels, but also uh, 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 also catch and provide and present momentum. So is useful because it combines it combines the momentum um, uh, um, identification along with the support and resistance levels. It can provide also trading signals if we carefully read the Ichimoku cloud and identify momentum, support, and resistance levels. So in Chinese, it is called the Ichimoku Kinko Hio. So you might found in the past or by Googling it, etc. You might found this name instead of Ichimoku Cloud. It's the same thing. However, what Ichimoku Kinko Hio means is that stands for equilibrium at a glance. Okay, so or otherwise one look equilibrium chart. This is what it roughly means because with just one look you can receive a range of information. You can receive support and resistance levels and momentum. So just briefly, a bit of a history, a bit of a background. Developed by Koichi Hosoda, a Japanese journalist, back in 1969. So it has been used by traders and investors ever since for identifying the direction of market trends. Okay, so it's a unique concoction of moving average calculations in order to that includes also trend indication, sorry, and it works also as a signal mechanism. Okay, so it's a more advanced indicator than MACD. Okay, it's still similar to MACD, still includes moving average calculations, provides momentum similar to MACD, but it's a more advanced, we can say, we could call it the next step, like a step up, a more advanced MACD, let's say, okay? So this is how it looks like, okay? So it is combined by 5 different lines or plots, if you prefer, okay? The Tenkan-sen, the Kinchun-san, the Senko Span A and Senko Span B, and Chiku Span. You don't obviously need to know these names. What I want you to know is how to read them. So you don't need to know the calculations that the graph is showing over here or the names. Okay, I will explain one by one these lines and these plots in order to see together eventually what each one of these means and what it means when our price line is above them or below them. Okay, so this is what matters to identify whether the price action is above the cloud or below the cloud. This is what will give you, will provide trading signals for us. Okay, so as I mentioned, composed by 5 lines. Okay, so then Tenkashen, which looks like that. Come on. Let me get the step backwards just to show you again the chart. Come on, come on, come on. Or actually, by having this on, I can show you in the MT4. Okay, this is Renko, so I will delete Renko for now, and I will put back on the Ichimoku. So we could take one by one together the Ichimoku first. Okay, this is Ichimoku I have applied on. Okay, so Tenkashen up. Tenkashen, which okay, Tenkashen is a conversion line. Okay, actually is it has this line has been calculated by uh, um, by by calculated by summing up the 9-period high plus the 9-period low and divided by 2. So we have found the average price between these two, the last 9-period highs and 9-period low, and divided by 2. So this is the midpoint of the 9-day high-low range, which means that the line spans just under 2 weeks. So as you can see over here, is with blue line. You don't need to know all these, guys, just telling you that this is a convention line by summing up the 9-day high, 9-day low over 2. If you are in a daily basis, if you are in an hourly basis, then it will the Tenkashen line, the conversion line, it will be the average between the 9-session high plus the 9-session low over 2. So with blue, we have the Tenkashen line. Now, the Kinchusen is the baseline with a red color, okay, as you can see. So this is the average number, the average price, so the moving average pretty much, the average of the previous 26 sessions, so 26 session high plus the 26 session low divided by 2. So if we are an hourly chart, it will be 26 hours high plus 26 hours low over 2. If we are on a daily basis, it will be 26-day high plus 26-day low over 2, and so on and so forth. So it's the midpoint of the previous 26 session high low range. Now, Senko Span A. Okay, Senko Span A is this leading span A, which we can see over here. Can you see it? So is this leading, is the cloud, is the top line, is the green line of the cloud, okay, which takes the conversion line, so the Tenkashen line, okay, plus the baseline divided by 2, it gives us the um, the upper line of the past two of the upper line of the cloud. Sorry guys, by mistake I clicked my mute button. Oh, sorry for that. So I'm back. Yes. So I'm back. Where did I left it though? Oh God. Sorry for that. So I was explaining the Senko Span A. So Senko Span A is the top line of the cloud. So it's a sum up of Kinkushen and Tenkashen over 2, while the Senko Span B, which is the bottom line of the cloud, okay, is taking is known as the leading span B otherwise, and is taking the 52 period high plus the 52 period low divided by 2, so it's the midpoint of a 52 session range, okay. So if we are in a daily pay basis, it will take the 52 day range. If we are in an hourly basis, we'll take the 52 hourly range, and so on and so forth. But you don't need to know all this. I just explain in order to later on to know, to understand how we're gonna use these lines. Okay, and very last is the Chiku span, is the green line, okay, which it doesn't follow. If you check, it doesn't follow our price action. The Kinchusen and Tenkashen are exactly moving along with the price action. The cloud is moving forward the price action because it gives us potential target areas. That's why it's forward. So it's an advance. It's giving us in the direction for the future. But if you check the Chiku span, it's lagging. It's behind the line. That's why it's called the price action. That's why it's called lagging span, because it shows the closing levels plotted 26 sessions in the past. Okay, that's why it's behind. So how we gonna use them? This is what we care about. How we gonna use them? Okay, here is whether they work or not. I will come back in a second to this information. But you need to know that actually let's see how we use it, and we're gonna see why it's good to be used and why it's not. What's the advantage and disadvantages later on? So how to use it? So we said that Tenkashen, which is the blue line, is taking 9-day sessions. So this is a line which is considered fast and sensitive. So and it is the one that it follows price action closely. It's the closest line that we got for with the closest with the price action. The red line, we said that it is calculated based on the 26-day with a 26-day basis. So the red line, okay, trails the faster blue line, but follows quite well the price as well. So these two could work as our immediate support and resistance levels if we are in a short term, but they can also work as for identifying for us a very first signal that the price could turn down or could extend up. So this is the very first trigger points for us in order to identify a potential opportunity. Okay, now the cloud, either red or green, it doesn't matter. What it matters is where is it placed. Is it above the price? Is it below the price? So it matters, actually the color matters, but what matters the most is also where our price action is. Is it above or below the cloud, or is it within the cloud? So if the cloud is green, like this one, like here, sorry, and the price is above it, then this is a bullish signal. Okay, green cloud with the price action being above it is a bullish signal. Actually says that there is an overall bullish trend. If the cloud is red and the price is below it, which is something that we can see here, not very clearly, but we can see it here. It was the very first signal, and here as well. But okay, let me see the MT5, FT4. So okay, my chart here is the green, and let me zoom out a bit. So change the color so you can follow me. Colors. So we want this with red, and we want it full. Sorry, on with green because we set up, and we want them down with the red, so it will be clearer. Okay, is it better right now? Yeah, it looks better right now. Perfect. So if I just yeah, so you can see that, guys. So if our price is below the cloud and cloud is also red, then we have a strong indication that we are in a strong overall downturn trend. Okay, this is a daily chart. So if the price is above the red cloud, then that means that we don't have anything specific right now. We might is an early sign of a potential reversal trend, but we are not sure. It's not something that you can be sure about. What you can be sure about is that if the price is below a red, so for example, let me zoom out. If the price is trending low, is below the cloud, either green or red, but eventually the cloud turns into red, then that's an indication that you can confirm over here an extension to the downside, an overall downtrend. If the price is above the cloud and eventually the cloud turn green, then that's an indication that an overall bullish trend started. Okay, can you see that? That's the daily euro yen. So it turned up, but the cloud was still red, eventually turned green, and the assets keep extending higher and higher. So it's something that if we had noticed it since January, it lasted up to here, up to May, for 5 months. Okay, easy busy. Okay, I have all my examples are the most of my examples are in a white template. Okay, in the slides. So very briefly, how what each signal can offer us. So now we said how we can spot what the cloud means if it's green, red, and when the price is above or below it. Now, if the blue line, okay, the blue line crosses the red line, think it's like moving averages. If we have a blue above the red, so blue, remind you, blue is the short-term one, red is the long-term one. So if the blue turns above red, that means short-term bullish signal. Okay, so it means that the asset will continue for the near term upside because the Tenkashen cross above the Kinkushen. So this is a good entry point, guys, for a long entry point. If the price and if so, now we can see an example that Tenkashen cross, the blue cross above the red. Okay, so that's a bullish signal for the short term. But at the same time, we can see that the cloud is red. Okay, so that's why I said it's a short-term bullish signal. So for the next few sessions or days, if we are in a daily um, chart. But if you see a cross like that, so the blue to be above red, but at the same time your cloud is green, then this is an even stronger bullish signal. So this implies that it could extend for a long, long time to the upside. It's an even stronger bullish signal, okay? So let's move on. So a cross like that, the one that I mentioned when blue crosses red, we said that it's a bullish signal, but if at the same time our cloud is green and the price above the cloud, then this is an even stronger signal. And an example like that, it could be seen here when they crossed green, see? So it lasted from July, it went up, up to October, and it kept moving up until December, when eventually the in January the blue turned below red, and now that was a nice exit point. Another exit point, if you had managed to enter in July, for example, it could have been the turn of blue below the red over here in October, September, October, somewhere here. So that's why if the blue turns again below red, that could be an exit point. Okay, so are you with me, guys? So bullish cross of blue. So blue above red is a bullish signal. If for a long position, if blue turns below red, then that could be your exit point of this position. Now, if blue is below the red, so the red line is above, so it's a bit wrong over here, red crosses, so if the red is above the blue, okay, then that's a bearish signal, okay. And if at the same time you have the red line above the blue line, so the red is below, the blue is the blue is below the red line, and at the same time you have a red cloud, then this is an even stronger bearish signal for a short position. Okay, so like here we had blue below the red, so we know that this is a bearish signal. Okay, but the cloud was green, so it could have been our entry point, but we had to put tighter target areas, for example, because it wasn't a very, very strong bearish signal. It was still a bearish signal, but a stronger bearish signal came once the cloud turned red and the blue line continue moving lower below the red line. So another entry point would have been either here that the cloud turn red, and if you weren't sure because it was consolidating, another entry point will have been here when we had for a long time a red cloud, and at the same time a crossing again of red below, of a blue below the red. So that was another entry point. So we had several entry points over here. Okay, so have in mind that if blue is below the red and at the same time the price is below a red cloud, that's a strong bearish signal. Okay, so so what else? So okay, let's move on since you don't have questions. So here is an example of Doral cat. Okay, that I took from Investopedia, to be honest. So it's over there. You can see it. Investopedia is a great website for beginners. for finding definitions and etc. So it's a dollar cut chart example. Okay, so you can see over here, it went up, it went down, up, down, so and so on and so forth. We can see a clear, back in the 4th of March, we could see a clear support at 1:15.21 after this low candle over here. We could see that there was an immediate support over here. Then it broke it and it moved lower. Okay, so by applying Ichimoku now to our example, we can see that okay, these are a bit different color ones, but it doesn't matter. Okay, you can see still the blue line, you can see the red line, and you can see the cloud as well. Okay, if it was me, I would have changed the color of the cloud because you cannot really see the shift. But just to clarify with you guys, so this is a green one, and this should have been a green one. So let me color it just to make it for you easier. This visibility was a mistake having with the same color, but don't worry, I will help you. So this is green because at the top line of the cloud is the Senko Span A. So that's why I understood that is green. Okay, and this is red. This is red. And this is red. Okay, are you with me so far? So you can see this dollar cut. We could have sorry. Okay. Now, so where we are standing right now, our price is below, far away from the cloud. Okay, and if I zoom in, you can see that the blue line crossed below the red line. So that's an entry point because cloud already turned red, and we have a bearish signal over here from these two lines, indicating that there is further decline. Okay, are you okay so far? Ichem, when we have blue line in Ichimoku below red is a bearish signal, but if we at the same time that this happens, the cloud is red and the price is below the cloud, this is an even stronger bearish signal. If the blue line is above the red line and at the same time our price is above a green cloud, that's a strong bullish signal, my dear Ikem. This is the recap. Okay. Don't worry, it's recorded, so you will receive my recording as well. So this is how we put all together. So in this dollar cut, if you were about to trade it, the cloud suggests that actually, okay, we don't know how it then eventually ended, but if let's assume that we had been over here, okay, we had seen that the asset was within the red cloud, and until eventually we have the break of the cloud and the price move away below the cloud. So that was another bearish signal. Okay, another bearish signal for entering short at where did it cross and finally exit the cloud? It finally exit the cloud at 1:14.10. So that could have been a nice entry point for short with targets with target being set, do you know where? On our, let me get back and remind you that line, that fifth line that we haven't talked about yet. Let me get back. The Ichimoku span. Ichimoku span could have been a nice target level. Because if you notice carefully in this Investopedia example, once our asset broken below the cloud and with the fast moving average below the red line, which is another bearish signal, so we could enter long. And where was the Ichimoku span back then? Ichimoku span was over here at 112. So it indicates us the target. So we could have entered short at 114.10 with very first target at 112 and stop loss. And stop loss, do you know stop loss? Where stop loss should be? No? Oh, okay. Stop loss, you could pick stop loss by setting the upper line of the cloud. So 115.50. Or your latest high. That's up to you. Let's move on to see further examples so you will understand what I'm talking about. See, this is a dollar yen example. Okay, dollar yen example. Again, Ichimoku cloud. This is our Ichimoku span, which it's a level that we could use for either stop loss or support or target level. And we have our two moving averages, the Tenkan-Shen and King-Shu-Shen, and we have the cloud as well. So I will draw it again. I should have noticed that from the beginning. So I will. So this is with red. Okay, imagine this with red. Don't worry about the color because in MT4 it is colored. It's just these examples that I found in Investopedia that they unfortunately they use. So this is green and this is green as well because is the red line is above. So yeah, green. So over here, dollar yen example. We'll do this analysis on gold using the daily time frame. Let us see where it is hitting. It's been wild lately. Okay, I will do that. Okay, Kim. So let's finish that first and we can do that afterwards. So over here, dollar yen example. Fluctuating between 116 and 119 figures, right? Initially it was fluctuating between 116 and 119, right? Before dropping. So here the cloud is a product of the range bound scenario, right? For the very first 4 months. So over here you can see that there was we couldn't really enter the market over here because it was a bit confusing. It was the price was within the cloud, so there wasn't a clear indication where is it going to. Then it turned below the cloud, but we didn't have any strong signal. We didn't have a cross of the two moving averages. The two moving average, if you notice, if I zoom in, this light green, light red, and there is another line, a red one, if you notice. They are consolidating together, so they don't give us really a signal either to the upside or to the downside, okay? Until eventually the E cross, so the short-term one cross above the red one, and the asset managed to move above the cloud turned green, so that was a short-term bullish signal. Eventually the price turned down within the cloud and extended lower and moved below the cloud. So when this happened, when the asset came below the cloud, we had also a bearish cross over here of the 2 moving average. So that was a bearish cross. So we could have taken an entry over here, but be aware, but because the cloud is green, is not a strong bearish signal. So we need to be a bit tight in regards to where we can set our stop loss or target level. So if you have observed and identified this full bear, nearly full body, one long bearish candle along with the crossing of the price below the cloud and the bearish cross of the 2 moving averages over here, then you could enter short over here at the closing of this candle at 114.50 with targets at the Ichimoku span. Ichimoku span is down here when this happened, when we took our entry. So it was at 112. So target over here, entry over here, and stop loss at the cloud. Okay, or you can use trailing stop loss. That could have been tighter. Indeed, after 1, 2, 3, 4, 5 sessions, it hit a target, right? It hit a target, and that was that. If you have identified something like that, this is how you can trade it. Okay. Now, let's move on. Another entry that we could have taken in dollar yen, it will be at 114.20. Okay, and why is that? 114.20 is when, okay, is when we could see a cross of the um, sorry. Actually, is what we said by entering over here when that candle closed with target at 112.20. Stop loss, we could set your stop loss at the cloud, and by keeping a risk and reward either 1-to-1 or 2-to-1, you could, if you had a 2-to-1 risk and reward, you could have set your stop loss tighter somewhere here, because the distance between 114.20, which is the entry level, up to 112, which is the target level, is around 220 pips, somewhere there. And so 220 pips, so that means that if we want to gain double of what we are risking, then we need to put the stop loss halfway. So 220 over 2 is 110. So another possible stop loss should have been 110 pips above the entry point. So 110 pips above 114.20, it should be at 115.30. 115.30 could have been another potential stop loss. 115.30 somewhere here. So that's a good level. So one keynote to remember, notice how the Ichimoku is applied to longer time frames. As this instance shows daily figures, the application will not work as well with many indicators, technical indicators, since the volatility is in shorter time frames. So that was the example. We have finished with the examples. We have done 3 examples for Ichimoku. Let's move on with Renko. Okay. Are you okay, guys? So here is Renko. I spent 45 minutes on the Ichimoku. So Renko, over here I have a combo of Renko with Ichimoku. Renko is being it can be seen with this red and blue and red pricks. Okay, they look like pricks. So Renko charts are actually composed by blue and red pricks. Okay, so it has been developed by by the Japanese as well. So what it shows is how it's been calculated and it has been built actually is by using price movement rather than both price and standardized time intervals like most of the charts are. So um, every time that we're getting a new prick, every time a new prick is created in our chart, that means this is because the price moves a specific moved at a specific price amount, right? So each block or brick, call it as you wish, usually tends to be positioned at the um, at a 55 degrees angle, okay, either up or below. So an up brick is typically colored with blue or white, okay. A down brick is usually colored by red or black if you are in a white chart, okay. So Renko chart are composed by bricks that are created at a 45-degree angles to each other. And a brick can be any size, okay, any price size. By default, it will be at 10 pips. So you can amend it. By default, it will be at 10. But it can change based on your trading strategy, on your time zone and time frame, and etc. It can be amended. So let's see further what Renko chart could help, how Renko chart could help us in the next few slides. So just to let you know guys, that Renko is quite preferred. It's actually the good thing, the advantage of Renko is that it filters out noise and helps you to see clearer, I could say, the trend. So since all movements, it shows you clear the trend because all movements that are smaller than the box size are filtered out. Okay. Remember that Renko charts typically only use closing prices. Okay. That's why we say that they filter out any kind of noise. So let me give you a brief understanding of how they can be used and how they could help you. So as we said, Renko charts are designed to filter out any minor price movements in order to, because what they aim to present is the trend, the overall trend. So we could say that's a trend indicator. It presents trend. So it makes actually the trends much easier to be spotted by us. So the downside, okay, while let's say while with the Renko, it makes it easier for us to spot the trends. The downside is that some price information is lost due to simple brick construction of Renko charts. So the very first step for that we need to be aware in regards to the Renko charts is the size of the box and the color of the box. So let me get back to this chart. So you can see that there are some long, big bricks, some smaller ones, and what matters is the length and the color as well, and of course whether they are below or above the price. So it's something similar with the cloud of the Ichimoku. So if we have a blue or a white color, a big size brick, that's a bullish sign, especially if it's above our price action. If our brick is a big one, a red one, and is below the price, then that's a bearish sign. Okay, guys, you with me so far? So length of the brick, color of the brick, and whether it's above or below the price. This is what matters. So, okay, here you cannot really see the length, but it's just a brief, a nice briefing of what are the trigger points in a Renko chart. So you can see over here that we had continuous bullish bricks, right? So we could have we can say that our asset is in an uptrend. We had just one bearish brick, a red brick, and the very next one is again a bullish one. So that implies that we had a correction of this long-term uptrend. So that was another buying opportunity after short-term pullback. If you missed that, and that's another indication that the uptrend will continue. Now, in regards to the flip side, a selling signal could have been if we have after a long bullish trend, if we have consecutive bearish pricks, more than three and more. Okay, so that is either a stop, either an exit point if you had been long, or it could have been a reversal signal to the downside because potentially our asset, because the uptrend has run out of steam and is expected to, it could be possibly turned down. So that's another entry point for a short position though. Now, similar to this correction, correction of the uptrend, we can see something similar in the downtrend as well. So a single brick against, so a single bullish brick after we have identified strong downtrend could have been a shorting opportunity after short-term pullback. Okay? So that's another example. Okay, so let me find. So, okay. Bum, bum. What else I want to say about Renko? Let me double check. I have put a lot of examples on. So these are more of them. So let me just. So here we are. So this is the same example that I showed you before. Okay, it's just over here. Whatever I have just mentioned is written. Is written over here, so you can find all everything that I'm saying verbally in our slides as well. So in regards to Renko, don't worry guys, I'm gonna go to before I finish, I will do at least one example in the MT4. Okay, so don't worry about it. Don't worry, Kim. I know that you came a bit late, so don't worry about it. So yeah, before we finish the theory of all of this, just to highlight that in regards to the Renko charts, guys, okay, the way that you can incorporate Renko charts in your own trading strategies, there are actually a lot of ways to do that. So here I highlight three of them. So how you can use it? You can use Renko bricks, blocks, whatever that you want to call them, as patterns, just like patterns. So in the form of a pattern. So you have your candlestick charts. You can apply Renko like I did over here. Okay, you can apply. Let me get rid of the Ichimoku. Let's put Renko on Renko over here. Apply it. Okay. Did I? Oops. Yeah, applied in the 1 hour chart. So here I have applied Renko. So I have my candlesticks, I have my chart as usual, and I put the Renko on so you can use it just like you can use that as a pattern in a form of a pattern on your candlesticks chart. And if you identify on the Renko patterns such as head and shoulders, triangles, rounded tops or bottoms, so the usual pattern that we tend to identify in our MT4 using candlesticks, if you identify these kind of patterns on the Renko, using Renko, then they pretty much providing to you the same signals as a normal chart. So if you have a head and shoulders, if you have identified that Renko have by connecting Renkos, you can see a head and shoulder formation, and the price turn below the neckline of our Renko, then that's a bearish signal. If you have a triangle using the bricks, if the bricks are providing some kind of a rounding top or a rounding bottom, so the same signals, the same things will, the same way you're using patterns, candlestick pattern, you can use them Renko in the Renko as well. So also you can utilize the Renko chart as a trailing stop loss. So so they can help you sticking to the trend until there is a seasonable reversal. So you can use it for using as trailing stop loss. So when and if trend run for a long time, this could result in large profits. Unfortunately, it's hard to know which price move will run and which will end in reversal. So trend trading strategies will come with risk. So how you can do that? So let's assume that we have identified this upside movement along with some with 3 consecutive bullish Renko brinks over here, so that we could see that a bullish movement has been started, and we decided to enter long. Okay, to enter long. So 1, 2, 3 consecutive bricks. So let's assume that we have entered over here at 130. So the previous brick, the bottom of the previous brick, could have been used as your previous stop loss, or you can measure the length of the brick to identify a possible trailing stop. So here is 98, 9, here is approximately 100. So you could have a stop loss, a trailing stop loss 10 pips below the price. Okay, so you can use them as trailing stops as well, or you can use them also as support and resistance levels. So Renko charts actually highlight support and resistance levels. Okay, so if you cannot identify support and resistance level using your candlesticks, okay, then Renko will help you identify some immediate support and resistance levels. So when Renko just continually turn lower or higher near a certain price area, so this indicates a strong resistance or support levels. Okay, so what I mean, let me bring my chart on. So consecutive, so let me just okay. So over here, I have applied the euro yen for a 1 hour chart. Sorry, for 1 hour chart over here. So how you can identify immediate support and resistance levels? First of all, you can see these dotted lines over here that can give you automatically, without you doing actually anything, immediate resistance level and immediate support level. So this is, along with the bricks, the Renko chart can provide you also an immediate range, so an immediate support and resistance level. Can you see that? This area. This is plotted automatically using the Renko indicator. Okay, guys? So also by connecting the so by if we have, as I said, continuously Renko bricks moving higher and higher and higher, or lower, lower and lower. So for example, over here, okay, that we had 1, 2, 3 consecutive red bricks, okay, then these are providing to us the immediate support level. So if we have been over here, let me just, okay, let's assume that we have been over here, right? 1 Renko, 2 Renkos, 3 Renkos. Okay, so but their price is above it, right? The price above it eventually turned below it. Okay, so this could be used again, the top or the bottom of the bricks could have been used as your resistance level, so as your stop loss as well, if you had entered long in this decline. Now you were in an uptrend like this one, then again the bricks could be used as for identifying the support level, right? You see consecutive bullish bricks. So by setting your stop loss at the bottom of the previous brick, you can identify your support level, so your stop loss as well. But you see, by having, so right here my asset is consolidating. I have red, then I have blue brick, red brick, blue brick, red brick. Then eventually I might have again a blue one, because the asset is consolidating, so we cannot really take any signal right now. But because this is happening, so let me actually, that's why we could use the bodies of the bricks as immediate support and resistance levels. So that was in regard to Renko. Let's combine it before I finish this session. So over here I have combined Renko with Ichimoku. So you need to remember everything that we learned today about the bricks, the Renko charts, and the Ichimoku. Remember that we said that in Ichimoku, if the Tenkashin, so the blue line, turns above the red line, is a bullish signal, and if a stronger bullish signal, if the cloud is green, is bullish as well. So if this is combined with the Renko chart as well, and we have at the same time that this is happening, also also blue bricks. Okay, in this case the bullish bricks are with green, okay, are with green, then this indicate the continuation to a bullish the continuation of the bullish trend. However, if we have if in this bullish trend eventually we have seen the sorry, eventually we have seen let's say we have seen a red brick, then that could be an exit level. So if you combine Ichimoku with Renko, you need to have in mind that a buying signal Okay. If it can be seen, if there are blue bricks or green bricks, so bullish bricks, and they are above a green cloud, a green Ichimoku cloud. So this is a buying signal. A selling signal is when we have red bricks, okay, below, okay, below a red cloud. Another sell signal is if we have the bearish bricks, the red bricks, okay, three or more consecutive red bricks, even if the cloud is green, like the example over here. Are you with me so far? Also, some exit to identify an exit position for Ichimoku breakout. You can use the Ichimoku breakout. So exit position for Ichimoku breakout also with Renko chart is discretionary, but you can exit on the levels of the support and resistance because the profitability is higher and there is minus stress by trading. I know that this chart is not great, so don't worry. I'm gonna go right now to my MT4 and have a final example in the MT4. So don't worry about it, okay, guys? So now let's put on. So here is my dollar yen. Let's put on also Ichimoku before we finish the session to have a better understanding on how we can combine these two indicators. So I have already Renko on. Let me put Ichimoku on as well. Perfect. Okay. So I will not, you said that you want to use gold. I'm not sure whether gold will be a good example, but I'll do my best. Obviously, euro yen in 1 hour chart is consolidating, so there is no sign either for a rebound or a further drift. So if you don't see, if there is a consolidation signal either from the Ichimoku and the Renko as well, then uh, you don't have anything to trade on or any decision to take. You need to wait until there is a clear sign or either a bullish one or a bearish one. So where is my gold? Silver. Um, oh, here it is. Okay. Cool. So okay. So what we have over here, let's use it. Let's stack a bit. Please, can you do this analysis on gold? Yes, this is what I'm doing right now. Ikem. Sorry, my PC stuck. Give me a second. Oops. Sorry, guys, give me a second because my PC doesn't respond. Okay, guys, I'm back. Sorry for that. I have too much open. That's why. Guys, it seems sorry. It seems that I have a bit of a technical problem. So, okay, you can see my screen. Okay, I think yes, you can. So let's discuss on what we are seeing right now in this frozen screen because my PC is a PC problem. So it seems that I have too many things open and that's why this happens. So what we can see, we have over here um, a gold chart, okay, with Ichimoku cloud on. So over here you could see that the let me just try and or unless if I use so just give me a second. Yeah, now this 75, okay. Sorry, guys. I'm facing a technical issue. It seems so. We need to stick to the examples that I have on the actual slides. Okay. Sorry for that. I don't know what happened, but it seems that I have lost my connection. It's hopefully you can hear me. I don't know what's going on over here, but we have to stay on the examples that I have on my slides. So let's get back to the slides. Okay. So, and on the very last one, when we have the combination of bricks of Renko with Ichimoku. Okay, over here. So good until at least I have this Euro Yen 1 hour over here. So over here, for example, we had, so you can see how over here is a combination of Renko with Ichimoku. So as you can see, we had 3 consecutive bricks, bullish bricks, right? Because they are blue, okay, in my black chart. And so by having 3, you need to have at least 3 consecutive ones, okay? So 3 consecutive, and once the third closed, okay, on the very next session, we had seen the bullish cross, okay, of the bullish cross of the two moving averages. Okay, so that was another indication that we could have an extension of the upwards move for euro yen in the 1 hour chart. So this the bullish cross of these two moving average is the very first bullish signal that we have, along with the in combination with the 3 consecutive bullish bricks, until eventually the asset also moved above the cloud, and that was another indication for the bullish for the up for the continuation of the uptrend. Another indication, if you missed all this, everything that I have just said, it was just this single red brick. So 1, 2, 3, 4, 5 consecutive bullish bricks, and just a single red brick. Okay, and the one follow was another blue one, so another bullish one. So that indicates that we have a buying opportunity. Okay, after this short-term pullback of this upwards trend. So that was another potential entry point to the upside using Renko with Ichimoku at the same time. And that was an even better one because at the same time we had the asset price action above the cloud, something that is also indicating a bullish momentum with the with targets based on your risk and reward ratio. Okay, or you can use also traditional indicators for identifying potential targets, such as the previous high, such as this one, or the Ichimoku span over here that it was at 131 level. So that could have been um, our entry, our target area as well, or you can use the Fibonacci extension as well. So so this was an entry over here, that was another entry to the upside over here. Okay, and an exit point we said is that if we identify the red two consecutive red bricks in an uptrend. So that came after over here, which we have two consecutive bricks. So that could have been an exit position, an exit level for this long-term uptrend. Okay. Now over here, what we have, the asset after 1, 2, 3, 4, 5, 6 consecutive bullish Renkos, and with the asset moving above the cloud, eventually started sideways, posting the very first bearish Renko, and the very next one, the second one, that was an indication that the uptrend ran out of steam, while the third Renko confirmed this pullback and this turn to the downside, this reversal of the trend, along with the decline, the extending lower of our moving of our Ichimoku Tenkashen and Kinkushen. Okay, so until they eventually bearishly crossed, confirming the downtrend is in place. Okay. So that's a selling opportunity if you have identified the consecutive breaks, the consecutive bearish breaks that signal the end of this uptrend in the end of December, the very last end of December. So the reversal to the downside in the very first trading day of the 2022. So that was back in the Monday, on Monday's trading. Okay, so this is how you need to read your charts if you are using the combination, the code Renko and Ichimoku system. Okay, guys. So that was it from me. I have also put at the very last few slides the pros and cons for Renko chart for you to have a look. But anyway, you have to know that every single trading strategy, every single indicator, um, uh, you need to up to do your risk management before entering the market, because after all they are just indicators. So you need to use your you might have some losing trades, you might have some gaining trades as well, but you can always decide to control your risk. You must actually control your risk and manage how much capital you are prepared to lose. This is what risk management is all about. So you need to if you're using this kind of system, please consider adding your stop loss orders to Renko charts that can help you to exit trade at a predetermined level when the asset doesn't move in the expected direction. Another thing to consider is only putting a portion of available capital into your trade. Okay, so this can help you to reduce the chance of large losses, as we keep saying again and again. Okay, so guys, if you don't have any further questions, I will call it a date. Thank you very much for attending. Hopefully you enjoyed. Really sorry for not being able to provide you a live example. So for anything you need, please email us at webinars@hotforex.com and we will reply as soon as possible. Thank you very much. Have a great day ahead and see you again tomorrow with a Facebook and YouTube live with Stuart going through the aftermath of FOMC and also the jobless claims, and a live analysis, a live Facebook and YouTube analysis on the NFP on Friday. Yes, it is recorded, so you will get the link, my dear Daniel. Thank you. Have a great day ahead. Bye-bye.